Okay, good morning. Welcome to this morning's meetings of the Pension Committee and Board. Before we start, we've been advised that the convener is unable to attend this morning's meeting. So the first item of business before we go to the main agenda will be to appoint a chair for the meeting. That's going to be a member of the Pensions Committee, and normally, because we work in hybrid, we would prefer that that's somebody from who's attending in the room today. There's a limited number of the committee members in the room this morning. But if I can maybe ask for nominations or a nomination.
Nominate Ian Sinclair.
Okay, if everybody's happy with that, can I ask, well, Councillor Sinclair first of all, be happy to take the chair? Maybe a loaded question.
Yeah, content to do that for today.
Okay. And could we ask the committee to just we take a 5-minute adjournment, just allow to speak to the convener about the proceedings this morning? Yeah.
I would nominate Anne Hanna.
I think I don't think, Councillor Hanna?
Thank you, Councillor Spears. But I did already nominate Ian, and I'm content that he should go ahead as has been agreed. I don't know if you're aware, but I've been off the last 2 days, so there are sort of discussions that I would normally have had about the detail of the agenda that I have not had, and in order to ensure that the business goes forward in an orderly manner, I think it's better that somebody.
Normally they ask if there's any other nominations. We didn't get that this morning, but maybe somebody externally would want.
No, that's incorrect. I did ask that and nobody else nominated. So we've got Councillor Sinclair. He's accepted the nomination. We'll take a 5-minute recess. It's just coming up at 10:05, so we'll come back at 10:10 or thereabouts.
Good morning, everyone, and welcome along to the Falkirk Council Pensions Committee and Pensions Board meeting this morning, held in Grangemouth Community Education Unit, 69 to 71 Abbots Road in Grangemouth. Thank you very much for the beginning of the meeting, for the nomination to be chair, and we shall hopefully get through the business today as straightforwardly as possible. So first item on today's agenda, do we have any apologies?
We do. We've got apologies, as I said earlier, from the convener, Councillor Binney, from Councillor Aitchison.
Okay, thank you very much. Item 2, any declarations of interest to make this morning? No, can't see anybody online either. Okay, item 3, the minute of the last meeting. You want to say something on that, Slippery?
Not really. The minutes for the committee for approval, so it's just a case of the committee are happy to agree it as a correct record.
Okay. Is the committee content to agree?
Agreed.
Excellent, thank you. Okay, so moving on to item number 4, the annual audit report 24-25, and we move to yourself, Debbie.
Thank you, Councillor Sinclair. The purpose of the annual audit report paper today is to ask the committee to consider the annual audit report for 24-25, approve the signing of the audited accounts and agree the representation letter. Colleagues from Audit Scotland are here today to speak to their audit report, so I'll just make some brief points. Firstly, I'm delighted to say that the accounts, if approved today, will be in line with the regulatory deadline of 30th September for sign-off. Although with Councillor Binney, the convener, being ill, we're engaging with the auditor with regards to the actual signatory to be appended to the accounts. Just to say, I appreciate the work that the pensions team, and in particular Justina and also the Audit Scotland, have done to get us to this point. Once again, it's a lot of work over a number of months, but thanks to Justina and Kenny in particular's work, it's been relatively smooth over the last few months. The Pensions Committee and Board considered the unaudited accounts on the 24th of June 2025, and there's been no significant changes to the accounts following the audit processes, and there's also no significant issues that I need to bring to the attention of the Committee and Board. Pauline Gillen from Audit Scotland is here to present the annual audit report, and I would hand over to her just now.
Thank you, Debbie. Pauline, are you on the call?
Yes, I am.
Good morning.
Morning,
Just
everyone.
carry on.
Thank you. Yes, so we could turn first of all to the covering letter. I think it's Appendix 1 of the papers. So this letter is prepared under ISA 260, and it's addressed to this committee as those charged with governance. The most important bit of this letter is at paragraph 1, where I confirm that the audit is now complete and I'm in a position to be able to provide a clean opinion on the annual accounts for 24-25. As mentioned earlier, obviously a bit of a complication with Councillor Binney not being here, but we can discuss that offline and confirm what the arrangements are for signing. But once this committee have approved the accounts, then I'm happy to proceed with signing. A couple of things that the ISAs require me to bring to your attention, and I'll come on to those in a second when I go on to the annual audit report itself. I'm required to identify and highlight any unadjusted misstatements that are over the reporting threshold, and just advise that there's nothing that I need to bring to your attention in regard to that, but I'll come on to that in more detail in the annual audit report itself. I'm also required to get confirmation from the pension committee as those charged with governance that they aren't aware of any frauds, any events after the balance sheet date, so that's the 31st of March, any non-compliance with regulations or laws, and any related transactions or relationships that aren't included in the accounts that they want to bring to my attention. Nothing has been advised to me thus far, so I'm happy to proceed on that basis. Attached at the covering letter Appendix B is the ISA 580 letter, which is a letter of management representations that will be signed by the Section 95 officer. At the same time, the accounts are signed and will be provided to me along with the signed accounts to enable me to sign. Members will have seen this letter in previous years, and there's nothing in it that's any different from previous years. But I know it's on the agenda for you to formally approve that letter. Also included as an appendix is the independent auditor's report for your information, and that's already been inserted into the accounts, which are ready for signing. We have at paragraph 10 an outstanding matter here, and I think perhaps in previous years you'll have seen this, and it relates to some of the assurances that we get from the external auditors for 3 of the fund's employer bodies. And we have to date not received that information. We have a annual protocol with other auditors where they provide some information to us, typically around about contribution levels. We haven't received that information yet, and that's quite common due to just timings of when they conclude their audits. However, the team have done some additional procedures that allows us to proceed with signing in the absence of those outstanding pieces of information. So just to give members assurances of that it won't hold up this audit. If I move on to the annual audit report itself, the report essentially summarises the work that the team have carried out during the 24-25 audit. Page 3 of the report details the key messages from the work that we've carried out, covers the audit of the annual report and accounts themselves, but also the 4 wider code areas that frame public sector audit in Scotland. So just a couple of things to draw to your attention. Turn first of all to Exhibit 1. We repeat for your attention the levels of materiality that we've applied to the audit. We have overall materiality of £71 million with a reporting threshold of 3.5 million. So that's essentially the level at which we would bring to your attention any misstatements in the accounts. ISA 260 requires me to communicate any significant findings from the audit, and at Exhibit 2 you'll see that we have one matter there to bring to your attention. And it relates to valuation of level 3 investments, which I'm bringing to your attention not because it's material, but because it relates to one of our significant risks of material misstatement. And you'll see there we've given it an explanation for it. Members have seen this issue arise in previous years. It relates to the detailed testing of level 3 investments, which don't have published prices or observable data on which to evidence the year-end value. So the team has to do quite a lot of work on that. The timing of when the accounts are prepared and when the fund managers produce their year-end valuations, because of that timing difference, we do find that the figures vary. So you'll see there that the impact of the adjustments would be an overstatement of 1.2 million in the investment assets, well below materiality. So we are content that management have agreed not to make that change to the accounts. And again, that's something we would expect to see every year, but we're not concerned about it and are happy for the amount not to be adjusted, and we don't have a recommendation arising from it. Exhibit 3 details the 2 significant risks that we identified and included in our annual audit plan at the start of the audit. Members will recall earlier in the year. The first one is in relation to management override of control. That's a standard risk that appears in all audits, and it just reflects management's unique position to be able to override any controls in the financial system. You'll see there in the middle column the various audit procedures that we carry out to address that risk, and then in the final column the outcome of that audit work. And you'll see that we haven't identified any issues there. The second risk that we had identified as part of our planning, again, this is a standard risk for pension funds, and it relates to level 2 and level 3 investments, just of the nature of them, the complexity and the level of estimation in the year-end valuations. And you'll see again there a range of auditing procedures that we carry out to give ourselves assurance that the year-end figures are not materially misstated. The remainder of the report covers the 4 wider dimension areas, and you'll see there we make positive comments on arrangements for financial management in the year. We note the continued good performance of the fund's investments, with all policy groups exceeding the benchmark return this year. We also highlight effective governance arrangements in place, including the monitoring of investments and fund manager performance. We have, however, included a recommendation in relation to reporting of risk to this committee and consideration of risk, and also in relation to the fund's risk register. We've made a suggestion that it be subject to biannual review rather than it currently being considered annually. And that's just to ensure that any emerging issues can be considered in a timely way, particularly in a volatile economic and geopolitical environment that we are currently in. You'll see that that has been included in the action plan at the back with management's response to that action. That was the only recommendation we made this year, and you can see that with management's response, and we'll follow up next year. We've also included, for your information, the recommendation that we had in the previous year's audit, which is now fully implemented. That was all I want to say on the annual report, but I'm happy to take any questions or comments on it, and just extend my thanks to the finance team for helping us get into this point. This is the second year since COVID that we've been able to meet the 30th of September deadline, so I think it's a great achievement for both teams. So thank you very much for that, and happy to take any questions.
Okay, thank you for your report to us this morning. We'll go to Councillor Spears for the first question.
You mentioned the valuation of investments and that you didn't have the full information. Did that come under when you previously mentioned information not received?
No, Councillor Spears, those are two different things. So the information that we hadn't received was from the other employer bodies who participate in the fund. So their external auditors provide me as the auditor for the pension fund with some assurances, particularly around about contribution levels, and we would agree that the contribution levels the fund recognises and the ones that the other employer bodies recognise are the same, and there aren't any differences. In previous years, there has been a bit of a timing lag from us receiving that information, but as I mentioned, we are able to do some additional procedures ourselves that mean that we don't have to rely on that work. The investment issue it's not such that the information is outstanding, it's just the timing. So when the pension fund team are preparing the accounts, the final year valuations aren't quite ready yet. So there's always going to be that timing difference, and the team expect to see that. So it's not a concern. It's not a concern for audit.
Councillor Spears, if you can pop your microphone on.
The valuation of investment.
I think if you can repeat that question, Councillor Spears.
The valuation of investment.
Is there a particular thing, Councillor Spears, about the valuation? Is there a particular issue you think? Just the issue that was talking about the level.
Well, we have many investments, and she raised the question of the valuation of investment. Is our valuation? We're talking about an audit here. We need to know if it's good valuation. Is it accurate?
Yeah. So
are we getting a return on our investment? As a pension committee, that's quite an obvious question.
I think Pauline mentioned that the return on investment has been good, and that is mentioned in the report. The returns are good. The valuation question is about.
They were asking her to expand on it.
Oh, right, sorry. Expand on the level 3 investments that she. Pauline, I don't know if you want to expand a little bit further on the level 3 investment issue that happens every year.
Yes. So it's simply a timing matter. So at the year end of the 31st of March, the pension fund team are preparing the accounts. So the information they have at that point hasn't quite been finalised by the fund managers. So when they prepare the unaudited accounts, they will have a year-end valuation that we use for the audit. And in the months that follow, then the pension fund will receive the final valuation figures, if that makes sense. And then we'll compare just to see if there's any differences. And you can see here that we're content. There are no material differences. It doesn't make any difference to the year-end valuation of the accounts. So no adjustments are required to the accounts. It's simply a timing issue.
Do you think you will receive this information soon?
So the information has been received, and that's how we were able to. You'll see Exhibit 2. Where we explain that the information was received during the audit, and we've compared the figures to see that there isn't a material difference in the figure that was included in the accounts and the figure that we received during the audit itself. It's simply a timing issue, and the figures are not material, but we have now received all the information that we need to provide assurances over the year-end investment values. So hopefully that gives you some assurance.
So can you indicate a time when this might be available especially to the board.
Councillor
The
Spears, I
information
think
is all available.
I'll bring Amanda in at this point.
I think, just as Pauline said, that information is available. The auditors have had it. So an estimate's been put into the accounts based on best information at that time. An update's been provided. The two have been compared by audit. There's not a significant difference, and that's what's highlighted in the audit report. In terms of the returns on investments and things, this committee receives regular reports and on the investment review that are presented by the LPF. We also provide the updates on the joint investment forum. So returns and performance of our fund is regularly monitored and discussed through this committee, not just within these accounts.
Right, thank you for that. It was just that Audit Scotland had indicated that they were, I think, lots of information not received. So
that's not for the investment reviews. Pauline explained that's two
Well,
different issues.
it is important if it's a valuation of investment.
But they have that information. It's not
No.
this time. They got it through the audit.
Yeah, I think as has been explained, it's also stated in the report at page 36 of today's agenda. If you've got no further questions, I'll move on to Councillor Hannah.
Thank you, convener. Thank you to all the officers and to Audit Scotland for all the hard work in bringing this forward. Just a small question again on the question of valuation of investment assets, Exhibit 2, the page you were just referring to, 36 of the papers. It's mentioned there that there was a net difference in the valuation of 2.8 million, which is not material. And I think most of our beneficiaries might think £2.8 million was quite a material figure. And I wonder if you could say a little more about how you come to a conclusion that £2.8 million of a net difference is not material.
Pauline.
Certainly, thank you, Councillor Hannah. Yes, you'll see it, Exhibit 1 of the report. We outline the materiality that we work towards for the pension fund. You'll appreciate when we do the audit, we can't test everything that's in the accounts. Therefore, an essential part of audit is considering the materiality for the audit, and that drives our audit approach. You'll see there that for the pension fund, we set our materiality on the basis of what the net assets are, because that's the most significant part of the account, your investment assets, and it's set at 2% of net assets, which is quite a low number, and you'll see that's £71 million. It may seem like a large number, but that 2.8 million is very, very much below the 2%, the £71 million asset, and in fact, it's actually below the reporting threshold of 3.5 million, which is the level at which I would bring to this committee's attention any misstatements. The only reason that we are bringing it to your attention, because it relates to investments, it also relates to the significant risk that we have in the account. So we're bringing it to your attention, but hopefully you can see that 2.8 million in the context of the figures in Exhibit 1. It's very much below any of our reporting thresholds. Materiality levels, I can accept, may seem as if it's a large number, but in the context of the scheme itself and in the context of the value of the overall investments, it's certainly not material to us and certainly below our reporting threshold.
I could just maybe clarify. So the net assets being 3.6 billion, it would only be considered material if it was in excess of the 71 million, which is the 2%, and therefore 2.8 million is not material.
Correct.
Thank you. Thank you, convener.
Thank you, Councillor Hannah. Do we have any further questions from any members of the committee or board? No? Okay, so in that case, we'll turn to the recommendations in the report at page 13. Asked to note the intended unqualified audit opinions, the independent auditor's covering letter and proposed independent auditor's report, Appendix 1, and the annual audit report for 24-25, Appendix 2. And the Pensions Committee is asked to agree the letter of representation addressed to Audit Scotland from the Chief Finance Officer and approve the signing of the 24-25 audited pension fund annual report and accounts, Appendix 3, and their publication on the fund website. Are we agreed?
Agreed.
Agreed. Thank you very much. Okay, turning to item 5, review of the fund's cessation policy. And
Thank you, Councillor Sinclair. As previously advised at the June committee of the Committee Board, the fund's cessation policy needed to be amended to reflect a change in the scheme's regulations that gives employers who are investigating or planning to exit Falkirk Council Pension Fund a 90-day guarantee on the cessation valuation they are provided with. Previously, the cessation valuation was calculated after we had moved all of the exiting employers' employees out of active membership. Sorry. This allowed for an accurate measurement of the employer liabilities. The introduction of the 90-day guarantee now means that some estimation is required, and the cessation policy has been updated to clarify how the fund would handle this. Since the last meeting of the committee and board, the revised cessation policy has been put out to consultation with scheme employers in line with the requirements of the scheme regulations, and no comments or feedback to request changes to the proposed revised policy have been received. As such, committee is asked to approve the revised policy, which is attached as Appendix 1 to this report. Once approved, the policy will be published on the Pension Fund website.
Thank you, Catherine. Is there any questions from Councillor Spears?
Does that cover all employees or just some employees, or if they're termed employees who pay into the pension fund?
So it covers all employers, and it will be employees because it's only the employees of a participating employer that can join the LGPS. So they have to have a contract of employment with that employer. So it is employees, but it's actually the policy applies to the employers because it is the employers who bear the funding risk.
I'll bring Amanda in. I think she's going to come in.
I was just going to say it doesn't apply to necessarily all employers in the sense that not all employers have the option to withdraw from the fund. So councils.
Thank you.
I was really interested in the people who are deemed employees, if they're on equal footing with all employees. But it's something I brought up with you before, but I'll bring it up with you privately.
I suppose this is about employers who choose not to offer the local government pension scheme to their staff. So that's a decision for the employer to take to withdraw from local government pension scheme. And this is about how we would then administer that. So that's they sort of it's not about an individual employee decision, it's about an employer decision.
Thank you. Any further questions? No, none online. Okay, turn to the recommendations. If that's
Hi,
hang on. Sorry.
I was a bit late in putting my hand up.
Is that Angela? Yeah.
Yes, it is.
Yep.
It's Angela here. Thank you very much. I had read through the policy, and obviously, it's an indicative valuation that would be given to a potential exiting employer. I don't want to get into the mechanics of how you would calculate their share of it, but I'm just wondering as well, 90 days is quite a long time given the volatility of the markets and at the moment. I take it if there was material swings, that indicative valuation would be adjusted and the potential exiting employer could potentially change their mind about exiting. I take it all the processes that sit underneath this policy have been updated to reflect the policy.
In answer to your question, the 90-day guarantee is a 90-day guarantee regardless of market swings.
Okay.
The regulation was designed, that was the policy intention, and it's designed to give an exiting employer stability so they know what the position is if they were to choose to leave within that 90-day period.
Okay, so it's a potential risk to the fund then if there was swings in the wrong way right, okay, that's helpful, thank you.
Okay, thank you. Any further questions at all? No? Okay, So we shall turn to the recommendations, which is the Pension Committee is asked to approve the cessation policy. Are we agreed?
Agreed.
Agreed. Okay, thank you very much. Okay, now. So we're on to item 6 now, which is the Pension Fund Business Plan, and we'll hand over to Debbie.
Thank you, Councillor Sinclair. I'm going to start off from the investment accounting side of the business plan and hand over to Catherine for the administration and governance side. Various procurements have been underway over the last quarter. Excuse me. Firstly, joint procurements with our collaborative partners, Lothian and Fife, which helps reduce the cost and resource spent on these exercises for all of the funds. Firstly, the custody tender was published on Tuesday as part of that collaborative arrangement, and the voting and engagement paperwork is currently being prepared for a voting and engagement specialist or reviewing that supplier. In addition, we'll be looking to procure specialist legal services for investment and benefits over the next 6 months, which Catherine and I will do jointly. During the quarter, we appointed a new credit manager, Royal London, and our new actuarial contract began at the beginning of September, as was mentioned earlier. Following receipt of the appropriate cyber security information from the actuary, the data impact assessment is recently completed, and we'll be looking then to provide Barnett Waddingham with the information, the financial information, to rerun the numbers for 2023 valuation using their actuarial approach, so that we can get some visibility of the likely impact of any differences in approach. Following on from the training last year that was jointly held with Lothian Pension Fund and Fife, we're awaiting dates for further subject-specific investment training to be held jointly with Lothian and Fife. And on that note, I will hand over to Catherine.
Picking up where Debbie left off, as you're aware, it's now a requirement to report on the training undertaken throughout the year by each member of the committee and board. So just in case you were wondering why I've included a table on the training undertaken in the last quarter, it's not a league table, it's simply a record. We've also put in place bite-sized learning, which is well attended, but to achieve 100% attendance, I have asked for the training to be recorded so it can be shared with people who were not able to attend. Their attendance will be recorded once they have confirmed to me that they have viewed the video. Additionally, if you do any extracurricular training, could you please drop me an email with a brief outline of the training undertaken and how long you spent doing it. So, before I start on the key movements on the Funds Improvement and Transformation Plan as they relate to pension operations, can I just say that the compliance on the Regulator's Code of Practice will come before the November meeting of the committee and board and not December. That was an error on my part. Apologies. The first key activity that I'm going to mention on the business plan was the refresh of the fund's access control policy. This is a strategic document, it's confidential, and consequently it is in SharePoint as a background paper and visible for you to read there. This policy sets out the access controls in place to limit access to the fund's essential systems to those users who need to have access and use them. Progress on the McLeod project is painfully slow, and in the interests of time for today, because we have a lot on the agenda, I would defer discussion about this to when we get to the governance report, because there is an item on there where it will allow for a plenty opportunity. So just so we're not repeating discussions. Progress to connect the pensions dashboard, you'll be pleased to know, is going well. Since writing this report, we have actually established our connection to the dashboard, and our AVC providers have both confirmed that they are also positioned to switch on their connection on the 31st of October. So we are meeting our regulatory and statutory requirements on that matter. However, prior to 31 October, the fund will upload data, cleanse it, and establish routines to monitor incoming find requests and the regular admin we need to do to make sure that we are maintaining the high quality service that the regulator expects. I also noted from the minutes of the last meeting that interest was raised at the last meeting as to what does the pension dashboard look like. I think that's a very good question that everybody wants to know. But unfortunately, the dashboard itself at the front end, user end, is still being built. And I believe, but could not swear to it, that it's being tested, but it could still be undergoing development. But it's getting closer to fruition where we, as end users, will actually be able to see if we went on, what would we see for our pension information. And that's me.
Thank you very much. Any questions on this item? Councillor Hannah.
Thank you, convener. I was going to ask about McLeod, but if I will defer those questions to the next report. So my second question is in relation to the pensions dashboard. At what point would you anticipate being able to demonstrate that to committee and board? Because you know how much I like a good training course.
Yeah, unfortunately, I do not have an answer for you. It should have been at the stage right now where it's being tested by real people, not people who actually know the system. But my understanding is it's probably still at that stage where it's being tested by people who actually know what it should be doing rather than Joe Blogg's public. I would be surprised if it was available to view this year. I would hedge my bets second half of 2026, but you never know. It could be earlier, but I would say as a realistic expectation, go with second half of 2026.
Can I maybe just ask a bit of clarification on that? Because unless I'm misreading this, we're talking about it being live from January 2026. So we can't look at it until second half of 2026. Seems a bit unwise, to say the least.
The reason for that estimate is because we have what's called the data availability point, and DWP will give schemes 6 months notice prior to reaching the data availability point that this is the date data on the dashboard will become available to the general public. All of the schemes have a deadline to connect, and as I said, we have established a connection, but it's like almost like you're feeding in, but there's just no front to it yet to see. The testing is behind schedule, but it is up to the Money and Pensions Service to actually provide. Oh, you're talking about the member self-service portal. Sorry, not the. Sorry, it's the member, not the dashboard.
I was trying.
Sorry.
Yes, my mistake. I referred to the wrong thing.
Okay, so
it was the fact that the self-service portal is going to be available in January 2026, and I was a bit confused when you were talking about it being late 26 that we would learn about it.
So I think, yeah, so the member self-service portal is for our fund, it's for Falkirk Pension Fund. The pensions dashboard is the national project where people can go in and look at all their pensions in one place. So they're two very distinct and different projects. We have a little bit more control over the migration to the member self-service portal, albeit we have to work with our software provider. But they're decommissioning that, the one that we have at the moment, on the 31st of January, and we're going to move to the new portal. I think the point that Catherine's making in terms of the pensions dashboard is at the bottom of page 226, paragraph 6.2.8. We don't have that data availability point yet, but as Catherine's noted, we should get 6 months notice of when that will be reached. So what that means is anyone that's got pensions with more than just Falkirk Pension Fund would be able to go onto that dashboard and see all their pensions in one place, whereas the self-service portal will really just see Falkirk Council pension.
So we will be getting a look at it at an earlier stage.
I think we could look to do some kind of demonstration on the member self-service portal. I think we don't know what the dashboard's going to look like. So yeah, I think when the dashboard's going live, we would want to do something similar, but we're not able to do that yet. It's not been developed and we don't have access to it.
Okay, thank you. One other question, if I may. It's partly related to the McLeod issue, but it's also related to the pensions dashboard. It's about the resources that our pensions section have, because there are a couple of references here to concerns about the level of resources that are available to deliver on these things. So can I ask what you're thinking about doing in terms of taking that forward?
I would defer that to the next report because that's where I'm making a request for extra staff. Thank you.
Okay, I'm going to ask just a quick follow-up clarification question. The pensions dashboard is out with our control. The member service, self-service, is within our control.
Correct. The pensions dashboard is a national programme and that's governed by the Money and Pensions Service. The members' website that we have is within our control. We have that scheduled to run from the 14th of November to the 4th of January. I could actually circulate mock-ups of what the actual screens would look like if you're interested. But the actual, what will it look like? We don't start the testing till the 14th of November, so it would be December. We will go live in January. So, and there is no argument about that. That will happen.
Okay, Amanda.
The only thing I was just going to add was just that clarification that in terms of the pensions dashboard, our responsibility was to reach our staging date on the 31st of October, and that's what Catherine started off by saying that we've done successfully. So we've sort of done the bit we can do, and now it's just we really to see how that UK project would be.
Thank you. Councillor Spears.
Just a thank you to Ms. Carruthers. I think it highlights the need for a training programme. On page 22654, it looks as though we've gave half an hour in-house training. Fairly important board for the council. Dashboards, lots of stuff coming up. So I think we need a training programme, maybe over several months, so we can accommodate within our diaries. Because contrary to popular belief, we're very busy people, and I'm sure you'll want to give us the maximum amount of training, considering we're now 2.5 years into this term.
I just come in. I just want to clarify. There's not been half an hour of training in the last 2.5 years. This is the session since June to August. There was that half-hour bite-sized training as part of the June committee. We also had training on Friday, which went through the responsible investment principles. That was sort of another 2.5 hours almost. And also there was significant training undertaken both as part of the triennial valuation, but also we've had sort of deep dives into the different asset classes that we've done jointly with our colleagues in Fife and Lothian. So we can certainly, as Catherine alluded to earlier, we are going to be looking at what that training looks like. So for example, we've been discussing whether we pull something together with our colleagues at Lothian and Fife to look at fixed income and credit. So we are working on that. We've also got the portal that Hagen demonstrated as the new actuaries. So I just wouldn't want anyone to have the impression that all that's been organised for the last 2.5 years is
well, this is the first time we've got a graph came up at committee meetings, and these do go on record. So will we be getting this kind of report card every pensions meeting?
Yes, and the other thing I would add is just that we did send out that knowledge questionnaire that we asked everyone to complete, so that it would help us to identify what training people needed. And so if any future items like that are sent out, it would be helpful if we get response.
Thank you. I think, and just following on from the training, I think had we not had such extensive training as a pensions committee, I think I would be lost half the time in dealing with these types of things. So thank you for that. Andy.
Thanks, Convener. I'm Andy Whitty. I'm one of the admitted bodies reps, so I'm on the pension board. Just questions about the fraud initiative. I think in the future services delivery table in section 4.3, it talks about 121 matches, 7 potential frauds, but it's got a future date. So just clarification: is that past activity as opposed to future, and does that continue? What does a match mean? And I suppose it's just to get some idea of scale of this. So if you extrapolated that to the full fund, what would potential overpayments be? Just as an idea of what scale we're talking about there, that would be helpful. Thanks.
Okay, so a match happens when a member of our pension fund flags up as receiving, a benefit. So if they're a pensioner, or a better one would be a pensioner who's employed by another local government council. They would, if they're employed by another one, back in the day we used to have what was called abatement. So if you were a re-employed pensioner, we would abate your pension. We don't do that now, but that will flag through as a match. That means what we have is 121 people where they have flagged up possibly for that, or in receipt of benefits or something else, which is telling us, or they could be dead. And we've listed them as a pensioner. Those generally we find are timing issues. It's because the report is sent in November, so we will be running the next National Fraud Initiative data run this November, but we won't actually get the matched results until the following year. And in that time, generally speaking, what happens is we've been notified of the death and we've dealt with that. So we do get a lot of what's called false positives. In that 121, we had a small number where we hadn't been notified. These were pensioner deaths, which we had not been notified of, which means we've then suspended the pension and started to follow through. It takes time, unfortunately, to follow through on those fines because we haven't been notified. So we need to get the death certificate in. We need to find out who's reported the death and then follow through from there and try and track somebody down so we can work out what the position is and recover the money from it generally is in the bank account, just sitting there. So does that answer your question?
Yes, I think it does. I think it's not a number that can be extrapolated then, because I was wondering if the 121 was of what number, and you'd identify 7, but the way it's done, that's the 100% of those you've identified. So no, thank you.
Thank you very much. Does anyone have any further questions? No. Okay, so turning to the recommendations in the report, the committee is asked to note the work undertaken and developments arising since the last report to the committee and the board, and committee and board are asked to note the proposed plan for outstanding work in the funds business plan for the remainder of 25-26. Are we agreed?
Agreed.
Excellent. Okay, thank you very much. Before we move on to the next item of business, just to welcome Rob Davis, who I see is with us now, and we are now on item 7, which is general governance matters, and I believe that this will be Debbie that takes us forward.
Thank you, Councillor Sinclair. I'm once again going to start on this and hand over to Catherine. So I'm starting because at the beginning we talk about a litigation with regard to Perigo. Just to confirm that amount has now been received by the fund. As noted in section 3.3 of the report, the amount is relatively small compared to the fund assets. And it was just to really flag it that a lot of work goes into these litigations and class actions, and they usually span over very long time periods. That said, we've recently been notified that another BHP bulletin will be settled, and although the overall amount sounds large, the amount for us is probably quite small when spread over all investors. But it was just really to highlight to committee and board that these items, litigations and class actions are going on in the background. And on that note, I'll hand over to Catherine.
Thank you, Debbie. So I will start by saying I'm happy to report that we won a significant concession in the government response to the consultation on inheritance tax on pension liabilities, as we now no longer have death in service benefits falling within the scope of inheritance tax. Additionally, from a scheme perspective, having personal representatives retaining that sole responsibility for the payment of inheritance tax was a good outcome for us. Though I do have to highlight there are still going to be some pretty significant changes that affect the scheme from this proposed legislation change, which will come into effect from the 6th of April 2027. I would also like to say that whilst this is meant to be, I think, the final consultation, there is still a lot of kickback from other pension arrangements with regards to some of the proposed changes. So we could still yet see this legislation develop as the government consults, takes on board, and then decides whether or not to make change. So we will monitor those developments, and I'll report back anything that I think is material to the fund to yourselves. I've also mentioned on there that there is a toolkit that the regulator provides. It's very similar to the Barnett, Waddingham and Lighton. You can choose which you want to use, but right now the toolkit is undergoing development. So you might want to put Enlighten first and then maybe revisit the toolkit at the beginning of the 2026. And then on to the one that I know you are all interested in, which is additional staff for the pension section. I am aware that over the past few meetings, questions have been raised about the resourcing on the team. It isn't adequate, but the problem we have is in recruiting people with knowledge. We cannot recruit people with knowledge. We're having to recruit people who are fresh, no previous pensions knowledge, and then develop them. The problem with that is, or I should say the good thing about that is you get what you want, you develop the person that you want. The bad thing about that is you can only recruit so many people at one time before you create a different problem, because you've got too much of your learned knowledge trying to develop those who don't have knowledge. However, we do need people to be able to process the work, and the work on the section is not going to get any lighter. It is actually going to get heavier. The amendment regulations that I briefly referred to in there actually came out the day after I wrote the report, and I was like, oh my goodness, it is huge. And within it, there is one that is of particular interest, which is the fact that they will be removing the 75 death grant cap. What that means is currently we only pay a death grant if you're under the age of 75. They're removing that cap because they feel it's appropriate to do so, but they are backdating it to the point where it was removed in overriding legislation. So that's 2011. So we are going to have to look back almost 15 years worth of pensioner deaths to work out who we need to pay a top up to. There will likely be interest. That is just one project that we are facing in the coming year. We also have the pensions dashboard. As I said, that will be relatively quiet. There is an initial body of work when we establish that connection to cleanse our data and then maintain, but we won't be dealing with find requests. Find requests are the requests coming from the public to say, what is my pension rights with you. When that kicks off, we will have a lot more work within that team, and it cannot be absorbed by the current resource. It needs to be resourced. Ideally, we need to get that person in now so we can get them trained so that they can deal with those requests when they come in. In the interim, I would have that person working on McLeod Remedy so that we can start to make more meaningful progress in that area. And I'm happy to take any questions.
Thank you. Have any questions? Councillor Hannah.
Not so much a question, but
Councillor Hannah.
Thank you. In relation to the litigation issues, can I ask, are there costs to the pension fund in these litigation issues, or is that entirely a cost that is carried elsewhere?
It's a cost that's carried elsewhere. Justina, you might be better to.
A majority of this will be on a no-win, no-fee. So if there is a litigation, there will be a law firm that will carry out the work and pay for this work. And therefore, we will receive a portion of whatever is awarded to the if the litigation is successful. Not all the litigations will be successful. They take quite a few number of years. It could be around 10 years, sometimes, to settle those litigations.
I understand that it will be a no-win, no-fee on the part of the beneficiaries. But what about the defender in that case? If, for example, we are invested in that?
That would be their fees. So they will have to cover their own fees.
Thank you very much. Okay, the next question, as you might guess, comes on to the resources question. Now, there are a lot of different changes coming in. We're already, as I understand it, well behind with the McLeod changes. So have we got any idea of how many of our current beneficiaries we are in a sense being underpaid currently? Or are there any? And what exactly will be the consequences for the beneficiaries if we don't provide additional resourcing?
So many parts to that. We know that there is roughly 11,000 members benefiting from the McLeod Remedy, so have a right to a statutory underpin. We would estimate that less than 1% of that group would actually have an underpin, and that includes active members as well as deferred members, as well as pensioner members, as well as members who are deceased. There are 100 deceased members that we needed to look at to check, and whilst there is now the system functionality is improving, it is largely manual. We had a bulk update of the underpin, but there was just about 1,000, over 1,000 that we've had to do manual calculations for. That takes a lot of time. And so we are working our way through, but as I said, it is very slow. What we are finding is that very few are actually resulting in payments to actual people. And I'll explain that. Where we're finding the underpin bites the most is on transfer values. So payments we're making to other pension arrangements. Payments to people, not so much so, because the 49th is far more valuable than the, it gives you, it's about 22% better than your 160th that we're benchmarking against. And that 49th is also fully inflation proofed, whereas the 60th is linked to pay, which, as we know, generally doesn't keep up with inflation. So the underpin looks at what would you have got on the 49th against what would you have got on the 60th, and you get the better of. For the purposes of payments to actual people, the 49th is winning out. When it comes to transfer values, because of the way we value the pension, because the 60th is paid earlier than the 49th, that's where it's coming up. It's got a much bigger cost attached to that 60th. So the 49th is looking cheaper than the 60th. So even though the pension could be smaller, the value of that pension is higher. Does that make sense?
I think so. So the clarification is, yes, there are beneficiaries who are have not yet been paid their full benefits, but it's a very small number.
I suppose the challenge is that until we've gone through all the manual calculations, you kind of don't know, and that's why it's so important. We have to do it. We have to go through this process, but because it's so manual, we kind of recognise, we think we have the broad parameters. Catherine's explained those broad parameters of where we think the impact is highest, but it's still a manual exercise to go through.
Okay, thank you. Now, in relation to the removal of the age 75 cap and the backdating to 2011, clearly there are significant numbers of beneficiaries of that who have not had the payment. Have you got figures for that, or is that another one where until you actually do the exercise you won't know?
Correct. Until we do the exercise, I won't know. But we have a 10-year guarantee. So anybody who's retired after the age of 65, it is a report I would just need to run. Anybody who's died after the age, retired after the age of 65 and died before reaching, but died after reaching 75, sorry, I'm thinking about the report in my head as we speak, those people are going to be within scope. So mostly it's going to be late retirements. We fortunately don't have huge numbers of late retirements, but we do have them. And it will be a difficult exercise because, as I said, we will need to try and track down beneficiaries. And that's what's going to be hard, particularly if there isn't a survivor's pension in payment.
Okay, thank you. In the interests of time, I won't go through every single one of these issues. I'll ask one final question, which is two questions. One is in terms of the training, I get the fact that if you take existing staff away from actually delivering in order to train new staff, you're in a difficult situation. First bit of the question is, are there options for bringing in for outsourcing your training? Because there must be some levels of training that could be bought in from other sources, and have you investigated that, and are you undertaking that? And the second part of the question is, what's the kind of size of the resource we are talking about here that is the gap?
So the resource gap is 2 full-time equivalent at a reasonably senior level. We cannot recruit to that, so we're having to try to grow our own. And we have recruited 2 graduates, and we are, this also brings in the sourcing of training. We are also opening up training that is provided externally to the team on a, if you wish to do it, because we can't compel people to do the training, we will provide the training and the training will be paid for by the fund. There is what's called a level 2 qualification. It's run in tandem between the Pensions Management Institute and our current actuary, Barnett Waddingham, and that delivers foundation training in pensions. We have the graduates signed up for that, and there is interest within the team from other team members to undertake that. That has a cost of around about £1,000 per candidate. Then there is a level 3 qualification, but unfortunately that is only suitable for England and Wales at the moment. The Scottish funds have got together and are trying to, well, we're making a bid to the Local Government Association to make that also a Scotland-specific qualification. The problem is that Scotland as a whole hasn't engaged with the training provided by the Local Government Association traditionally, and they don't want to run that training at a loss. So we are in negotiations with them about how we do that. That training is nearer the £2,000. It is a more advanced qualification, and it, as I said, it is specific to the LGPS and builds on that foundation training that's provided at level 2. With regard to bringing in resource, I have a meeting lined up with Equinity. They do provide trained resource to actually work on projects, and I am aware that another Scottish fund has used them to focus on a particular project and that delivery, but that is something that is in train. Does that answer your question?
It does. Thank you. Thank you, convener.
Thank you, Councillor Spears.
I'll take it up later with Ms. Gorilla.
Thank you for that. Does anybody have any further questions? No. Okay, so turning to the recommendations, we are, the committee and board are invited to note the contents of the report and asked to approve the proposed increase to the administration section referred to in section 8 of the report. Are we agreed?
Agreed.
Excellent. Okay, so moving on to item number 8, in the investment review. That will be, I believe, Albert Chen, if he's on the call. Albert, over to you, sir.
Thanks very much. Good morning, everyone. So the regular quarterly investment update will cover the period to end of June 2025, and I'll be covering recent market developments, the fund's strategic allocation, and commenting on the performance to end June 2025. In terms of markets for Q2, global equities rose in the second quarter, rising 5.1% in sterling terms, recovering from the weakness during the prior quarter that had been driven by tariff concerns and AI skepticism. The subsequent 90-day suspension of tariffs and easing recession fears lifted investor risk appetite, and this was seen with very strong returns in AI-linked stocks and robust US corporate earnings, which further supported gains. European equities advanced on European central bank rate cuts and defence sector strength, while the Japanese market also posted robust gains. In bond markets, Treasury yields spiked on tariff headlines before retreating as the quarter unfolded. Fiscal concerns in the US deepened as the Big Beautiful Bill threatened wider deficits. During the quarter, the US Federal Reserve and Bank of Japan held interest rates steady, while the European Central Bank and Bank of England made modest cuts. Moving on to fund strategy, at paragraph 4.4, we have a table showing the strategic asset allocation of the fund by policy group on a quarterly basis over the past 12 months to end of June 2025. When you look at the numbers in that table, going from left to right, probably the main change to highlight has been the progressive increase in the sovereign bonds allocation, which has risen from just under 13% to 15% at June 2025, and also a modest reduction in credit, which happened in Q1 2025 with disinvestment from an existing previous credit manager, which will be reinvested into a new credit manager in due course. As at the end of June 2025, you can see that the changes relative to the strategic target at the very right of that table show that most policy groups are broadly in line with their target allocation. The main differences are an underweight position to credit, so almost 4% underweight to credit, offset by a slight overweight to cash. Moving on to section 5 to talk about the fund returns. At paragraph 5.3, we note that the fund returned 2% over Q2 2025 against the benchmark return of 3.5%, so a modest underperformance for the quarter. The fund's lower risk equity mandates contributed to the underperformance. They returned 3.6% against the equity benchmark return of 4.6%. At paragraph 5.4, we note that the fund's benchmark is aligned to a long-term, not quarterly objective. So we shouldn't pay be overly concerned about performance or relative performance on a single quarter. So we also note at paragraph 5.5 the longer-term returns. These show the fund has appreciated 7.5% since September 2001, which is ahead of the benchmark return of 6.5%. Over 5 years, the fund has risen 8%, compared with a benchmark return of 2.9%. Over 5 years, the fund has benefited from very strong equity and infrastructure returns, while UK government bonds have generated negative returns. The other aspect that we've included in this quarter's paper, and which we'll be doing going forward, is to include some risk statistics, because investment performance shouldn't just be concerned with just the performance. We need to think about the level of risk that has been taken. And when we're talking about the level of risk, we're referring to the volatility of the fund's returns. So over the 5 years to 30th of June 2025, Northern Trust reports that the fund's annualized standard deviation, so that's a measure of volatility, that measure is 6.8% for the fund against the benchmark standard deviation at 10.1%. So what this shows is that the fund has therefore delivered high returns against benchmark over these 5 years, 8% versus 2.9%, with a lower level of risk, 6.8 versus 10.1. The other aspect that we've also included in this paper is at paragraph 5.11, which is that the fund's returns that we've noted above are gross of fees, as it is not possible to readily obtain complete fee information for private market assets at the time of report preparation. The fund has historically engaged CEM, an independent provider of cost benchmarking, to benchmark the fund's investment costs on an annual basis. The most recent benchmarking was to the period end March 2024, where CEM assessed Falkirk's investment costs to be 0.48%, and over the 5-year period to 31st of March 2024, the average is just shy of 0.6%. So that was all I was going to say in relation to the report. Happy to take any comments or questions you may have. Thank you.
Can I ask, thank you very much, Albert, for that report. Ask if there's any questions. Rob. You're on.
Yeah, I'm on now. Can you hear me, Albert?
Yep.
Yeah, good. Okay. Yeah, thanks for the report. I guess, Albert, my concern is that the news flow on sovereigns, particularly in the light of the pressure on the Federal Reserve by Donald Trump, in terms of his nominees on that, and also the sovereign debt situation in Europe, particularly France, and also in the UK. I mean, I view these developments with great concern. Is that something you share?
It's certainly a hot topic at the moment in terms of our investment discussions. So we are constantly looking at current market developments and potential areas of risk in terms of how it might impact the fund's assets. Yeah, I suppose what you're referring to in terms of deficits and in terms of the US as well as potentially the UK in terms of the fiscal position is something that's concerning, and that is being reflected in the returns that we've seen from government bonds, where yields have been progressively going higher. So to your question about, is it a concern that we share? Yes, and it is something that we are looking at. There are discussions around our allocation so the allocations that we have to sovereign bonds. So the current allocation for Falkirk is 15%. So currently the fund is sitting at target. Probably the other thing to mention is that while we're at target, the other aspect of a higher move in yields is that it would typically be expected to improve the fund's funding position. So if interest rates go up significantly from these current levels, then the funding position of the fund will also improve. So I think, in short, we are concerned about it. We are looking at it. The investment advisors have also been the independent advisors. So these are separate independent advisors to us at Lothian, have also been advising around whether it might make sense to adopt a shorter duration allocation to sovereign bonds, and that is something that's in the process of being considered.
Okay. I think Emmanuel, do you want to come in on that point? Or?
Thank you. Just to add to what Albert said, first of all, the fund does not hold either US or French government bonds. So even though that will have an impact on the broader environment, especially in the US, these are not assets that are held by the fund. And on the UK, to echo the point Albert made, the sovereign bonds will be the best available investable proxy to liabilities. And a 15% allocation is very low. And I would expect the benefits from higher rates to reduce liabilities by more than the loss that would be taken. That would be a key question with the upcoming valuation in terms of how much interest rate exposure the fund should be taking as part of its investment strategy.
Thank you. Rob, do you have more questions?
Well, yeah, just to follow up on that. I mean, it seems to me from a distance that what the US in particular and other sovereigns as well are expecting to effectively default on their debt through inflation, and higher inflation is going to impact pensioners' cost benefits in the future. But the implication is that pension benefits will not keep up with inflation, and that's my concern by having those investments in sovereign bonds. And I know we're underweight in sovereigns, but I would argue maybe we could be even more underweight and move more into hard assets, equities, to protect against upcoming inflation.
Just to note that obviously the benefits are inflation linked, so therefore your liabilities or the pensions received by pensioners will increase with inflation. And you could say there will be a default, but the liabilities are denominated in sterling and the assets we own in the sovereign bonds group are all denominated in sterling. I would not expect the UK government to default on its debt by refusing to repay either a coupon or a principal. They might, you're right, repay at a very higher inflation rate, but that means pensions will remain paid and they will go up with inflation.
Okay. Thank you very much, Rob. And we've got Councillor Hannah and then Councillor Spears.
I think I'm okay. I think the answers there kind of covered some of the issues I was asking.
Okay, thank you. In the spirit of brevity, thank you for that. Councillor Spears.
Page 241, Albert, 3.2, regarding global equities. You say that the European equities advance on the European Central Bank, the rate cuts and defence sector strength. Are you recommending that we invest in the defence sector?
That's not a recommendation. That's just an observation.
And very keenly held.
Okay. Does anyone have any further questions at all? No. Okay, so we turn to the recommendations at section 2. The committee and board asked to note recent investment market developments, the fund's strategic allocation and current positioning, and the fund's performance for the period ending 30th of June 2025. Are we content to note?
Agreed.
Thank you. Okay, turning now to item 9, engagement and voting activities. activity, and that'll be Debbie that takes this. Thank you.
Thank you, Councillor Sinclair. This paper is the standard quarterly report that you will recognise that looks at voting and engagement activity provided by Hermes EOS for Q2 of 2025. As noted in the list of background papers, a highlights report is uploaded to the SharePoint portal, and the highlights report should be considered confidential. Section 4 of the paper sets out the Hermes EOS approach to responsible investment through engagement, and this is the approach that the pension fund has adopted. Section 5 highlights that Hermes EOS engaged with 95 companies on 358 issues and objectives over that quarter. Again, detail on these engagements are included in the highlights report. In addition, paragraph 5.2 notes that the engagement reports from the Local Authority Pension Fund Forum and the ESG reports from Schroders and Legal & General are also in the SharePoint portal. The online voting position is set out in section 6. There are no significant issues to draw the committee and board attention to, but I'm happy to take any questions.
Thank you, Debbie. Does anyone have any questions on this report? Not seeing any. No, okay, so we'll move straight to the recommendations, and that is to note and comment on the contents of this report and the reports provided by Hermes EOS. There's no comment. Are we content to note the report?
Agreed.
Agreed.
Excellent. Thank you. Now we turn to item 10, which at this point is the exclusion of public, and I will call a short 10-minute recess to let that happen, and we'll come back here at 11:35. Thank you.
Excuse me, convener.
Yep.
Just I maybe ask Mr. Perry. Are you asking whether we're agreeing to it, or are you just assuming it's agreed?
A bit of both there. I think the assumption was that it was being made. We'd move on. Is that not the case?
I'm just trying to get my procedures right.
No, that's fine. Yeah, I think I took that as a general. There's the term general agreement and standing orders, and it was taking the lack of dissension that was general agreement to that. So,
okay, thank you.
To the motion.
Okay, thank you. We'll meet back here at 11:35.